let me ask you about this big deal in the indexing / data space here, where S&P is buying IHS Markit. This seems to be a pretty big deal to me. I mean, watching the London Stock Exchange now, they're buying Refinitiv, which is a big data provider as well. It seems like, the old joke was software is eating the world 10 years ago. One of our friends used to say that. And now it seems like data is eating the world, too. These data, whoever controls the data seems to control some very important information at this point. Do you have any thoughts on this deal, as well as the fact that they're controlling the indexes as well, these big players now?
You're absolutely right, Bob. I mean, we're seeing huge consolidation. It's a big move for S&P. Now, S&P has been dominant here in the U.S., but when you look at, for example, indexes overseas, many folks had turned to MSCI, especially with institutional mandates. Now, because Refinitiv has Lipper and a lot of FX currency indicators and indexes, they're going to be even a heavier global player. Combined, that will be $10 billion. And as we look at indexes really being the basis or chassis for the ETF industry, it's a big deal. So now we're going to have S&P Global being more dominant, going up against MSCI, and then also London Stock Exchange with FTSE Russell. It's getting more and more competitive in the indexing side because they are, in fact, de facto asset managers. These indexes are bringing in a lot of money. So like the big three in the ETF space, it's going to be fun to watch.
Yeah, Gerard, I don't know if you have any thoughts on this. I mean, you're a market watcher on this. This all gets into what I call the politics of index construction. As Tom mentioned, this is a small group of people that are really controlling things. MSCI, London Stock Exchange, maybe DAX, and S&P at this point. Does it matter to you at all who controls essentially, not the data so much, but even the indexing situation, given how important indexing has become?
I think it does matter, and we certainly pay close attention to it. We're big data consumers, as you know, and we consume data from many, many different third parties. What we often do is combine those data into proprietary data sets. So if one person sells to another person, we continue to consume that data and blend it with all different types of data to come up with a proprietary data set that we think adds value in terms of how we go about managing the portfolios. When it comes to indexing, I think Tom is spot on in terms of some of his observations around MSCI, S&P, FTSE Russell. They're all competing for business, and as long as there's many of them out there competing for business, and new index providers come in with some periodicity, like CRSP now has some commercial indices as well. I think that's some healthy competition for investors to choose from. Most of the indices deliver kind of similar asset allocations when it comes to their standard indices, so it's kind of a matter of tastes and preferences which index an investor might prefer relative to another.
Yeah, well, it certainly goes to the value. I mean, given the price that they paid for this, that data and the control those indexes, that's worth a lot of money now, and it's nice to see after all these years, those of us who, like Gerard and Tom, believe in indexing, and I'm one of them myself.